I think the ETFs are going to be helpful. Um, people are debating whether or not they're a sell the news event. Like, a lot of people priced in the ETFs, and is the first quarter underwhelming? It's certainly possible. That money doesn't just pour in as quickly as people think. One thing I would take the under on is people keep saying, well, what if, these tens of trillions of dollars of pools of capital have a 5% allocation, for example, or 3% allocation. And it's like, that's not going to happen anytime soon, most likely. I still think we're very early in this structural bull run, but I do think it's important not to take a bull run for granted. It's not necessarily like owed to you just because the halving's happening
Yeah.
or just because it's on that cycle. Now, I think it's probably still likely over the next 2 years, but it is important to kind of manage your expectations and risk accordingly.
It has been a few days since the commencement of trading for 11 spot Bitcoin ETFs, providing a rare opportunity for numerous institutional investors to directly invest in Bitcoin rather than relying on intermediary companies like MicroStrategy and Coinbase. Despite the initial excitement and the record-breaking $4.5 billion in transaction volume on the first day, Bitcoin's performance has not lived up to the expectations. After reaching an almost $49,000 peak on Thursday, Bitcoin is currently trading at $42,500, reflecting a 12% decline since the ETF's inception. However, renowned macro analyst and Bitcoin enthusiast Lyn Alden remains optimistic, viewing the recent downturn as a transient phase inherent in Bitcoin's volatility, and likely to conclude soon. In a recent interview with Natalie Brunell, Alden discussed the significance of fundamentals such as Bitcoin ETFs and the halving event, as well as macro factors like global liquidity. While emphasizing the importance of the first two factors, Alden also acknowledged the significant role played by macroeconomic factors in influencing price movements. She advises patience, suggesting that the awaited parabolic move synonymous with Bitcoin bull markets may take some time. Alden asserts that we are in the initial stages of a new bull market, acknowledging the likelihood of occasional turbulence but expressing confidence that, by the following year after the halving event, all elements will align, and cryptocurrency prices will experience a substantial surge.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I don't see any signs that Bitcoin is not going to continue to be correlated with liquidity. So I think one of the biggest challenges, everyone's kind of focused on the halving and things like that. And of course, that all matters. So the ETFs matter, the halving matters. The halving doesn't necessarily matter in the several months around the halving. Bitcoin's ongoing hardening is really important. But if you look at prior bull runs, there's a lot of variability around the halving. And I would say in large part, that's because it's actually liquidity that affected the timing more than just the halving. The halving helps set up higher highs and higher lows because it's how much Bitcoin's coming to the market that has to be absorbed, especially in a bear market, really matters. But the actual timing of 3 months, 6 months, 12 months is, in my opinion, far more liquidity driven. One kind of description I've given is that it's been known for a while that if you have a gold slice in your otherwise 60-40 stock bond portfolio, it improves your risk adjusted returns because there are periods of time where both stocks and bonds don't do well, but gold does well. So, for example, the 2000s decade or the 1970s decade, there are decades where just that slice helps a lot, and yet it's still underallocated compared to what you'd expect from looking at those numbers. Now, Bitcoin is like a rocket fuel version. I mean, if you look at that, Nakamoto portfolio or other types of resources that show what is adding a small slice of Bitcoin to your portfolio do, and it's like astounding for risk adjusted returns. So it should, you'd think it would catch on quicker. But some traditional pools of capital just take a long time to make investment decisions. Generally, when someone, a small business where the owner just has majority stake, they can make very swift decisions. There's some publicly traded companies that are still, a lot of the decisions still held by the founder. For example, MicroStrategy. They're able to make quicker, more decisive type of decisions because they have that capability. Whereas, firms that have a lot more spread out decision making, it can be a very long time to actually meaningfully adjust a portfolio strategy. So I do think that the ETFs are going to be helpful, maybe less so than people expect right away, but I'm hopeful. I think the other thing that could potentially derail it is a liquidity problem in 2024 or a stagnation in liquidity. It doesn't have to be a liquidity crisis, but it could be that you have just another stagnant liquidity situation. So you have like 6 months of choppy liquidity, choppy Bitcoin, and it kind of lets out some of that consensus steam, and then maybe you run in 2025, right?
Mm.
So I'm not trying to predict any of those scenarios. Like literally, if we look back at the end of the year, if Bitcoin has dipped into like, the upper 30s, or if it's already six figures, neither of those scenarios would surprise me because it's such a volatile asset and there's so much marginal difference that can happen. But that's why instead I've been far more comfortable making 2 year outlooks, which is that I really don't know what's going to happen in 2024, but at least I feel like I have a higher conviction of what's going to happen with the combination of 2024, 2025. So you absolutely could have a case where all these people are super bulled up for 2024, and maybe what they expect to happen doesn't, it gets all shifted back 6 to 12 months, for example. I think there's a lot of scenarios like that. So far, we've not really seen any sign of distribution. So, when Bitcoin goes through, kind of major bull runs, normally some of those older holders start to sell into that market strength. Maybe they want to rebalance, maybe they want to consume, now they can finally afford the house they wanted that they couldn't afford before. And so you see some of that distribution as new buyers come in. And
Yeah.
that process hasn't even started yet, based on any sort of on-chain analysis you look at. So I still think we're very early in this structural bull run, but I do think it's important not to take a bull run for granted. It's not necessarily like owed to you just because the halving's happening,
Yeah.
or just because it's on that cycle. Now, I think it's probably still likely over the next 2 years, but it is important to kind of manage your expectations and risk accordingly.
Consequently, divergent opinions among Bitcoin investors have emerged regarding the anticipated impacts on price and the perceived benefits, or lack thereof, of Bitcoin ETFs. On one side of the spectrum are proponents who emphasize the extensive opportunities they believe Bitcoin ETFs will unlock. They highlight how thousands of investors who previously couldn't directly invest in Bitcoin and other cryptocurrencies now have that capability, providing Wall Street with comprehensive exposure to the crypto market. Conversely, there exists another faction of investors who express concerns about the reciprocal exposure between Wall Street and the crypto market. They perceive traditional finance as a potential threat, considering it the antithesis of the principles Bitcoin was originally created to champion. Lyn Alden, in her interview with Brunell, suggests that this ideological clash was inevitable as Bitcoin evolved into a substantial asset class. Nonetheless, she underscores the significance of self-custody, hinting that it could become crucial if the government ever decides to impede the industry's growth. Additional excerpts from the interview further elaborate on these perspectives.
I'd point out that the Grayscale Bitcoin Trust already has like 500,000 Bitcoin. And so some of the concentration of custody risks that could happen from ETFs, I would say, have largely already been in place to some extent. Now, the majority of Bitcoin are not held like that. They're more distributed, which is a good thing. But there are some of these big pools that could be kind of either price issues or confiscation issues at some point, and that's not something that's gonna form. That's something that's already there. They're already kind of these big pools that are technically capturable. Um, Another thing I would say is that there's a degree of inevitability to it, which is to say that any large and liquid asset is likely to get an ETF for it, and is likely to get banks wanting to hold it either for themselves or for their customers. So to the extent that Bitcoin was successful, it was always going to face this at one point. It's not like something that can't not be faced. So the question is Bitcoin itself designed in such a way that it's ready for it? I think it is, but that's still another test it has to go through. It had to get through like the block size war. It had to get through some early bugs in the network. It had to get through. There are some countries that banned it and then like flip flopped on the ban.
Mm-hmm.
And there's challenges along the way, and I think this is another challenge that's going to materialize. Um, so institutional liquidity has both a pro and a con. The con is the obvious one, which is you don't really want a lot of Bitcoin in ETFs or in highly regulated silos that are capturable. That's the downside. The upside is that more liquidity and more kind of automatic rebalancing of large pools of capital can help reduce the volatility to some extent, which then can make it a better money for people that are using it non-custodially, especially
Mm.
in developing
Right.
countries. Because if you ask people why don't you use Bitcoin, the number one is usually volatility. They don't understand it and it's volatile. And so to the extent that it becomes larger and more liquid and more kind of widely held, that can actually then encourage more of those small self-custodial type of buyers to enter. So I think that's number one. Um, you know, The other one, I think the biggest challenge is kind of that privacy aspect,
Yeah.
where in order, the government doesn't mind if you have Bitcoin as long as it's in a silo. The second one is okay, you can custody it, but they want to know you custody it and how much.
Yeah.
And then the third one is they really don't want private Bitcoin self-custodially to move around because that threatens their income tax model, that threatens their control over kind of sanctions, that kind of goes against the core of the current system. So they really don't want that. And I think that's kind of the bigger fight that's going to be had this decade is basically that price might be doing well, but that it's not really kind of changing things as much as you think because it's held back by some of those frictions. The good news there is that so far it's been very hard to enforce that, right? So for example, Nigeria cut off Bitcoin from its banking system, and they remained having one of the highest adoption rates in the world, and specifically, according to Chainalysis, had the highest peer-to-peer trading volume in the world because that's how they got around the bank blockage. And then we just saw in recent weeks, Nigeria's central bank is like reversing their decision to some extent. They're basically realizing that their blanket ban is not working, and that instead they want to try to bring it back in and regulate it a little bit, which is basically a way of saying we kind of messed up. We also saw India flip-flop on this. We might be seeing in the process of Argentina, because they had done the similar thing where they didn't make it illegal to own, but they said, okay, banks can't get involved in the space as much as they want. Even fintech companies that are not banks still can't get into it. So they did this kind of series of restrictions to try to slow the outflow from the peso.
Mm-hmm.
But that's obviously probably going to be somewhat different under the current administration. And so we've seen a number of countries kind of bounce around on trying to do that, which is actually bullish because it shows how hard it is to do.
Meanwhile, Anthony Scaramucci, the founder of Skybridge Capital, has shared his perspectives on Bitcoin's recent correction. He attributes the price declines to investors liquidating their holdings in Grayscale Bitcoin Trust, suggesting that Wall Street requires more time to promote the newly launched ETFs. Scaramucci points out an observed surge in selling activities related to Grayscale and notes that the bankruptcy estate of FTX is contributing to the Bitcoin sell-off around the ETF announcement. Despite the current high volume of Bitcoin selling, Scaramucci anticipates the conclusion of the supply overhang within the next 6 to 8 trading days. He also highlights a forthcoming marketing period for Wall Street, indicating that the promotion of these ETFs will commence in about 8 days. Share your thoughts on both Alden's and Anthony Scaramucci's predictions and outlook for Bitcoin. Feel free to provide your comments and observations in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.